In the meantime, my next guest continues to love T-bills. I'm going to bring in Real Talk Capital CEO Rob Luna. Speaking of former swashbucklers, so Rob, hey, listen, the market made a huge reversal last Friday. The jobs report came out, the knee-jerk reaction was, oh, it's great, it's great, it's great. You start to look into it, maybe it wasn't so great. The market sees it, we take off. Then, of course, this tragic, ugly, barbaric action over the weekend. We open lower on Monday, we turn around, we go up. Tuesday was really great. We had breadth every single sector as the market was up. So you begin to salivate, at least I do as an investor, of a potential short squeeze. So I know that you've been really reluctant. What will it take for someone like you, who used to be more aggressive, now you're cautious, to become more constructive with the stock market in general?
Yeah, and the primary reason is because you've got these T-bills at 5.5%. You got money market accounts at 5%. So there's now an alternative. The only way that's going to change, Charles, is if you start to see these PPI numbers, CPI numbers come down to where the market could get comfortable that the Fed's going to have some cover to at least stop raising interest rates. And we still haven't got there yet. And I think until that happens, you're not going to be really rewarded for being that swashbuckler and getting out there. I think we're getting close, Charles, but we're not there yet. Two reasons, really. If you look at services and if you look at rents, those are not coming down. That's going to keep that number around that 3.8% inflation you're talking about, and that's a little bit of a challenge for the market.
So then have you assessed a potential worst-case scenario to the downside?
Yeah, I mean, look, it's very, very hard to tell those things. I think, this geopolitical event really didn't do much. I do believe there's a lot of cash on the sideline. You talked about the short interest right there, so there is a lot of fuel that could take it up. Look, you always got to be prepared for a 10-15% pullback at all times on stocks. I think that could happen, but, you look at days like today, the NASDAQ looks a little bit weak. I think that is about this geopolitical issue. They're talking about the 13th being a problem, so I think people are a little bit nervous, and again, if you're nervous, you can sit in cash and get paid right now.
What's interesting is we got this sentiment report, and of course the inflation rate on it's higher. We always hear Jay Powell said that one of his goals is to massage how the public thinks, right? When we expect inflation, it becomes a self-fulfilling prophecy. But bond yields are still down. I'm looking at, maybe I'm just looking for something, a needle in a haystack, but do you look for nuances like that in the market that really has been more knee-jerk reactions than anything else?
Yeah, I mean, I think you have to, and that's why, I looked at that jobs number just like you did. It wasn't really the type of jobs that you want to see. I'm looking at inflation to see is there some way this can come down. We're seeing those issues with rents and services. So look, we're all trying to figure out and get ahead for when the Fed is done, because at that point in time, it's usually going to be at the point where the economy is in the worst position, but it's the best position to start buying, and that's where you get that rally. It's coming soon, Charles, but there's not that, glowing needle in the haystack that you can pick up and get really aggressive right here.
In the meantime, I know you still like the cybersecurity stocks. Would you chase some of them here?
Yeah, I mean, look, Palo Alto, CrowdStrike, those are, to me, in my view, a no-brainer as a long-term hold. And look, they're performing great on up days, and when you have this geopolitical issue, everyone's worried about cybersecurity, personal security. They're doing well then. So I think it's the one sector that you can be aggressive on long-term right now.
I know it's early, only 5% of names have reported. What are you expecting, though, for the rest of earnings season?
Yeah, I expect that you could start to see some cracks. Like, I'm just starting to see it from some of my investors right now, that they're really small business owners just now starting to feel the pain. If you don't see it this quarter, I think you're going to see it next quarter. There is going to be a quarter here, either this or next, where there's going to be a surprise, in my view, that's going to slow things down a bit.
All right, Rob. Good stuff, man. Have a great weekend. Always great talking to you.
Yeah, congrats on the book, Charles.
Thank you.